What is going up, everybody? Hope everybody's having a fantastic day today. So in today's video, we're going to be talking about the different order types when you place an order to buy a stock. So as you guys can see, we have Apple pulled up here. And as you guys can see, we have buy MKT. That means buy at the market value. And the market value is going to be pretty much the first available price. And the risk that you play is when you have a stock that has very large spreads, when you click buy MKT or buy at the market price, often you get a pretty bad price because as the stock goes up and down, you could get placed up here because it's the fastest execution. So if you get placed here and the stock falls, then you'll be out of money. So, I do use market sometimes when I sell a stock, but oftentimes when I buy, I use a limit order. Now, limit orders are very, very easy to understand here. So let's just do an example here. Let's buy one share of Apple, and let's buy at the market price. So as you guys can see, it's the fastest execution. So now I got filled at 228.18. So as you guys can see, this stock goes up and down, up and down, up and down, up and down, very fast. So, and it's actually, it was a pretty decent fill because it's now $228.15. So that's not too bad. Only down 3 cents on the share. But now let's say if I wanted to get it when it pops back up to let's just go when it falls to 227.67. So what I'm going to do is I'm going to left click here. I'm going to go to buy custom and then click on buy custom here and then go buy custom with stop. So now when the stock hits it, I will get filled one share here, and if it keeps falling, then I will be out of this share with a stop loss. So let's get rid of these here. So now let's say, same idea, but let's say now we don't want that stop loss there. So what you're going to want to do is you're going to want to left click here. You're going to want to click buy. So now when that stock falls and hits that, I will get a order placed. So let's just kind of hang out, and I'm going to be talking about the difference between a limit order and a market order. Limit orders are better for day traders because you get to really pick out the price that you're buying it at. When I do the gap and go setup, I will often put 100 shares at that price of over the pre-market highs because that's where I normally buy in. And after I get those shares filled at that price, I will often buy more, as the stock goes up and up and up. But there has been times where I've gotten filled and it has consolidated or fallen down a little bit. But that's why I only use 100 shares because it's a little bit of a riskier play, and so I lower my share size to reduce the risk. So that's what I normally do there. But so that is pretty much the difference between a market order and a limit order. So I just canceled it here. So now that say if I bought one share of Apple, now that say I want to sell it on the market or at the market price. Same idea. We're going to be selling it at the best available price. So as you guys can see, it's $228.18. Let's click sell. It'll most likely get filled. Let's see. So it looks like it got filled at 218.16. I'm not sure, 2 cents. Yeah, because we did buy it at, remember, 228.18, and now it was 228.16. So even though that stock is, now at 228.25, you could have, if you have a large enough share size, that could have been a couple $100. So Now what I'm going to do is I am going to rebuy one. So let's click buy, getting that best available price. And often the more volume you guys have, it is often harder to get orders placed because the stock may be a little overcrowded here. But okay, I'm not sure what that was doing. That was kind of weird. Paper trading account is so weird. All right. Whoops, charts. Sorry, I'm like looking off to the side here because that's where obviously that's where my thing is at. All right, so now average price 220. See, this is like really crazy. Now let's say I wanted to sell this stock if it popped up to 228, 62. So what I'm going to do is I'm going to click left click here, and now I'm going to click sell. So now this is going to be a limit stop order. So when this stock comes up, I'll take profit. That's how often more swing traders trade. They will have these set up in multiple locations. I don't. I would rather actually manually click it when I swing trade, just so I know what's going on here. So that's sell at the market. See where I get filled. So it's 228.36. Whoa. Looks like I tapped it multiple times. But, all right. So we're up on the day 12 cents. Or, yeah. All right. 11 cents. All right. So that is pretty much the difference in the order type. So the market order is just the best available price. And a limit order is a specific price that you guys either want to buy or sell a stock at. So it's very easy. If you guys have any questions, please sure to leave them in the comments, and I will get to them. Or if you guys want to go in the chat room, and you guys can go to the chat room here, and you guys can leave questions down here. And so how to cover, basic questions here. So that's pretty much it, though. I hope you guys enjoyed this episode. Please sure to like, subscribe if you're new, comment comment, whatever. I don't care. All right, peace out, guys. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week. Take care.